So I'm going to talk about avoiding kryptonite in the 20s. I was going to call this the roaring 20s, but we don't know if it's going to be the roaring 20s or not. That remains to be seen. By kryptonite, I mean risk. So it's a little bit better title than sort of risk management in investing. But I'm going to talk to you a little bit about how we look at investing, how I look at this space, how we consider risk, and how we manage that risk. I'm also going to talk a little bit about what we see for the future of securities and securities tokens. So real quickly, on my background, I have sort of been in the securities business my whole life. My mom was a stockbroker starting in 1977, and I used to visit the floor of the brokerage every day after school. And I'd play with the Quotron machine, which you see up there in the corner, which was the most advanced computer that they had at the time. And I'd play with the pink sheets, and I traded stocks very, very young. Got my first job at Dean Witter, which later acquired Morgan Stanley and took the Morgan Stanley name. I got my first job there when I was 14, and I got my Series 7 when I was 19, and then started my own firm, Atlantic Financial. And we became successful, and also have a registered investment advisor. So I've done that my whole life, really. And I got into crypto about 7 years ago. And this was one of the earlier events that I went to. It's in its 6th year now. I've been here every single year. I think I've spoken at every single one of these. And it's been a really great snapshot of where the industry is. In the early days, it was just a bunch of hackers and programmers, and in a couple of years, it was a lot of hype, and it's sort of adjusted as the industry has changed. So I'm really glad to be here again this year. In talking about risk and avoiding kryptonite, you want to have a big picture philosophy. You saw what I was wearing this hat in the last slide that said, "Make equities great again." You want to think about what hat you're wearing. In that particular slide, I'm wearing a hat of somebody who is a fan of equities. And you can be a fan of different projects in this space, but it's important to recognize whether you're being an investor or not. So you could be very excited about something that's an open source project, or just excited about technology, which I am about a lot of things. But if you're an investor, that's a different standard. If you're an investor, you have an obligation to, if it's your own investments, yourself, and if you're a fiduciary or something, you have an obligation to do what's right for those investments. So tribalism and investing are antithetical to each other. If you have somebody who's in a tribe where they're a cheerleader for a certain asset, they're a slave to that asset, because that asset it is very easy to manipulate those people. It's very easy to fool them. It's very easy to bring them along. All you have to do is say talking points. So you should never be in a tribe. You should never say, I'm in favor of this asset or that asset. If you're wearing the hat as an investor, you need to be objective and logical, and look at each investment and say, is the investment selling me on the investment? Salespeople sell investments. Investors need to be sold. So you want to be in the investor seat. And the way to do that is to take a zoom back, have an asset allocation, some kind of chart that looks like this: small cap growth, large cap growth, value, international, and you have your crypto as a piece of that. You have to zoom back and say, what is your basic financial planning stuff? What is your risk tolerance? What's your profile? For large pensions, they have what's called an investment policy statement. What is your policy? What do you do for this money? And there's a lot of tools like that. In that, there may be some piece that is a crypto piece. So you may have a growth-oriented investor might have, 2% of their allocation might be to crypto. And then within that, you can use tools like this. With Spacesuit X is a tool that I invented, which helps you kind of analyze these things. But it's important to have that first step back. Once you do this, you can start to drill down deeper into each category. You can drill down deeper into saying, what are these things? And it's very important to look at what the investment is and where it fits into that overall pie chart. So, the biggest difference, securities and currency are completely different things. It doesn't really make any sense to compare gold or a digital gold asset and Bitcoin to Disney stock. They're just very, very different things. They could all be good, all be bad. It really depends on the situation and the person. So securities are not currency. They shouldn't be judged the same way that something like Bitcoin is. It's a different kind of thing. What makes you have the properties that make money good, which I'll get to in the next slide, but what makes an agreement good, which is really what a security is the terms of it. So if Apple came out with a digital token tomorrow and said this represents super voting rights on our shares, that would have real value. There's no question about that. It wouldn't even really matter as much what the other factors are. So if you're looking at Bitcoin or something that's trying to be money, which is only a small percentage of the things in the overall blockchain ecosystem, you have these principles of money. Is it fungible? Is it divisible? Limited supply, and so on. So I can wear a couple different hats. So I'm a Bitcoin fan. From an ideology standpoint, I believe in voluntarism, free markets. I'm a techie, I'm a geek, I'm an early Bitcoiner. I love Bitcoin. So I can wear one hat as sort of a Bitcoin fan. But that's different than the hat I wear as an investor. As an investor, I've got to look objectively and say, does this meet the properties of money? Yeah, it does, actually. Bitcoin's pretty good money. But I want to look at each thing separately. And it's really important to, in my opinion, look at it from the investor side first. The investor's the top of the food chain in all of this. Cheerleaders, salespeople, and fools who've been suckered into being a member of a tribe for somebody else's benefit are a dime a dozen. Good investors are a different story. If you want to be a good investor, and you should for some of this, like I say, you can be a huge fan and have your investments separate. And there's several things that I am a fan of, but I don't necessarily invest in. Investing is the ultimate skin in the game, and it's therefore the top of the food chain in all of these kind of economic endeavors. What I'm going to talk about for a second here is securities, tradable agreements, which are very different than currency, and they operate differently. What a security is basically a tradable agreement. The first one is the copy right down there in the lower right, was the Dutch East India Company. Prior to this, if you had a shipping expedition, you'd take your life savings, put it on a ship, and hope that it would work. So you sort of had this risk of kryptonite in that your ship could sink or be robbed by pirates. What this invention did, incredible invention, enabled you to take that money, pool it with other people, and then Dutch East India Company originally bought 30 ships, and then later it expanded to be much, much, much larger, but you're sharing the risk. It seems completely logical to us in today's world, but the first time it was done, it was a very big deal. And it changed the world. Dutch East India Company, adjusted for inflation, became larger than any company the world had ever seen. It's larger than all of these companies, Apple, Facebook, Google, Microsoft, all of them combined in today's dollars. And more importantly, it set off a revolution where you have this kind of instrument, this tradable instrument, a security, in this case a stock, that's traded. So people can share this risk and they can put skin in the game based on what they believe in. That's a really, really big deal. Really big deal. You can't really think of anything in the global economy that doesn't somehow touch public companies or just companies in general. Because remember, Dutch East India Company was not just public companies, it was just the idea of a corporation that had shares that could trade. So that's a really, really big deal, and it's completely changed the world. Because this kind of trading and the markets that it gave rise to is the core of what economies are supposed to be all about. An economy is supposed to be about people voluntarily doing whatever they want to do. Somebody was telling me earlier that they were talking to a friend and the friend couldn't understand how Bitcoin can have value if government doesn't set the value. And he said, no, that's the whole point. Well, that is the point. That's the way the world is supposed to work. It's supposed to have trade, and the more trade, the better. The more people that can take risks and put skin in the game, put money and investments based on their beliefs and their thesis, the better. And trade will always find a way. Usually technology is the limitations, but if you look back in the 20s and 30s and 40s and 50s, it's incredible what they're able to do. It's incredible what we're able to do now. Billions and billions and billions of transactions worth trillions of dollars. Trade will always find a way because this is what people want to do. This is what everybody wants to do. The core of it. They want to take risks based on what they believe. It's a very, very, very key concept, and it's a key part of free markets, capitalism, voluntarism, the way that the world should work. And it's created a lot of improvement in a lot of lives and a lot of jobs. Even in obstacles, trade's going to find a way. I love this because it shows stock traders in Iraq after the Coalition Provisional Authority took over, and they needed to have price discovery. They needed to figure out what these things are worth. What more important time than when you have crisis? You had buildings bombed, CEOs dead. They needed to find the prices, so they got out a whiteboard. The shares still exist, and they still have value, and they figured it out. That's what humans do. That's what humans want to do. They want to trade. They want to find value. They want to put risk out there. It's natural to us. But the current system has a lot of flaws. This would be a whole nother talk, but suffice it to say, the ledger system that you need to use to do this at scale is very tricky, and it's kind of broken because it relies on hundreds of these parties that don't trust each other, so they need to trust a centralized ledger. And there's better ways to do that now. We know that the invention of blockchain and the idea of a Bitcoin and a blockchain can do this better than anything else could do it before. It solved a new problem. That was something that took me a little while when I first got into this space to realize, is that this really is a new invention. It really does do a thing that you couldn't do before. So you have these huge clearing agencies that need to rely on this network of trusted and untrusted parties, and there is a better way now. A blockchain can do it better. And that, I think, is a very, very, very big deal because it leads back to these earlier themes of people trading and being able to place risk out there. So I love this. This was news just this week. An NBA player is tokenizing or attempting to tokenize his NBA contract. Now, I don't know if this is a good investment or not. I haven't even read the terms of it. It is certainly a very high-risk investment. It's probably not the kind of thing that most people should invest in. So again, wearing a different hat. My hat as a fan of this kind of thing in the future, I'm a big fan. As an investor, I don't know. And as an investment advisor, it's not something we would probably recommend. But the concept is really key. The concept is really key because what this means is that people can take an unusual asset like this and they can invest. And where that gets exciting, although it's very, very risky to bet on one person, where that gets exciting is when you have whole portfolios. Suppose every single athlete in the NFL and the NBA and every other league had this. Well, then you'd have a multi-billion-dollar market, and then you could have professional managers. Your buddy from high school who's really, really great at picking athletes might become a mini hedge fund manager of a small fund that specializes in this. Still probably very risky, but very, very, very interesting because of the way that you can spread that risk out. And that's the way the world wants to work. That's the way the world is meant to work. And that's what I think is very, very exciting. So that was quick time. I've talked a little bit about investing and risk, how to avoid kryptonite, have a big picture, long-term plan, zoom out, think about your asset allocation, and be aware of what hat that you're wearing because it will help you in understanding how the world works and what is going on behind the scenes. So be very, very cautious at all times to not jump into a tribe if you're wearing an investing hat. If you're wearing an investing hat, step back a little bit and have some objectivity, maybe even bounce ideas off of somebody else. And you can go from there. So that's a few things that I covered. My name's Bruce Fenton. I didn't tell the coolest part. So I started this career early on, and just recently we acquired an SEC registered broker dealer. I was first registered in 1992 when I was 19 years old. So we acquired an SEC registered broker dealer, and I activated my personal license just a couple weeks ago. So my compliance officer tells me I may be the only person in the world who can use this title or is using this title, but I'm calling myself Cypherpunk Stockbroker. So for what it's worth, that's the advice from Cypherpunk Stockbroker. And you feel free to follow me. We do a lot of events, the Satoshi Roundtable. We host some things up in New Hampshire. We'd love to talk to you, and hopefully that's some useful information for you. So thank you.